Okay, hello traders, and welcome to this live intraday strategy webinar on SB Trade Desk. We just got the release of CPI here in the United States, coming in stronger than expected on the headline. Year on year at 2.5 versus 2.4. That would beat the highest read that we've seen since March of 2012. At that point, it was at 2.7, so not quite that high, but that's still the highest read that we've seen since 2012. A quick look at core has us upticking to 2.3%. You're seeing the dollar break resistance here, guys. This is a pretty decent read. As we've continued to talk about over and over again, the Fed's dual mandate of price stability and maximum employment, it's really the inflation picture that is the laggard. And as this continues to pick up, certainly the core read of inflation, really the important read here at 2.3%. That is the highest read we've seen since basically since the high that we made last year, or secondary high that we made last year in August there. So a nice uptick in core inflation, certainly a welcome development here for the Fed. So good to be with you guys here this morning. We've got a lot to cover. DXY is on the menu for the first. Dollar CAD, dollar yen, Aussie dollar from yesterday. Aussie dollar looks to me like it's the breakout. So Pooja, if you're in the room, I see you there. We gave it a couple of shots. It looks like we're making a run to the upside. So we'll take a look at that. Euro dollar, pound dollar, and euro yen from the previous update. Pound dollar is just a string of real bad data for the last couple of days. The inflationary picture was pretty weak. The jobs picture, while strong, wage growth was really pitiful. And again, that inflationary picture really being the big problem. So we'll take a look at pound dollar and euro yen. I do want to touch base on euro pound, which is approaching support. And then we'll jump into the commodities. Any other questions or trade setups you guys have and want to throw on the message board? Christian, David, Conwall, Mark, Pooja, Ziad, great to see you guys here in the room. Okay, let's jump right in. So first things first, here's what the dollar index looks like. I guess we should take a look at relative performance heading into the U.S. Open. Looks like this. Stronger against all its major counterparts. No surprise. Biggest loser on the session. Sterling, again, that string of bad data continuing this morning, down 0.64%. You can see a sloth of losses here. Kiwi holding on relatively decently here, down 0.17% along with the loonie. Dollar CAD also very nice setup there. I think we do want to be poised for a top side break. Probably is breaking as we speak. Let me just take a look. Okay, this is the level to beat, 131. Keep an eye on that for dollar CAD as we get through the session here. Okay, let's go in order. Here's the dollar index, and here's what the dollar index looked like yesterday. So, sorry about that, guys. Here's what the index looked like. And the basic thing I just wanted to highlight is that we were looking at this parallel, and yesterday's high was exactly there. We were talking about that in the webinar as a first target. You saw a minor pullback, but here we are. Looks like we're trying to make that final thrust into the 101.80 target. This is a soft target, extends a little bit higher. You can see that here more clearly on the intraday chart, 101.53. If we see a topside break beyond that region, which we're seeing right now, there's really nothing on tap until 102. Okay, you have that upper median line parallel, which converges on the key 618 retracement. That's at 102.07. It looks like it's upcoming here on the dollar index. Here's what the index looks like now. All right, so the 60-minute chart kind of highlighting near-term resistance a little bit higher, but leaves room for the advance to really take another leg higher here. I wouldn't want to stand in front of this. That's now near-term support, 101.50, 101.53. You can see that pivot, perfect pivot. Resistance, resistance, break, check it as support, break through the highs. 102 is your target. You want to stay constructive above 101.53. If we make it back below the Asia lows here, expect a larger setback in the greenback. Keep in mind a couple things. We do have the second day of Fed testimony. That'll be today with Yellen before the Financial Services Committee. So while I don't think the commentary will bring as much volatility as yesterday, certainly the propensity is there. By the way, yesterday's commentary, the biggest takeaway, and I tweeted all the highlights that came across the terminal, guys, on SB Squawk. The basic highlight was the one comment that she said that keeping rates too low for too long certainly has its risks. And that's something that, while we've heard them say before, now holds even more emphasis because the economic data is really starting to improve. And do we need to be on crutches? Do we need this accommodative stance? As if Yellen said yesterday, the monetary policy stance remains accommodative. That's true. Do we still need that accommodative stance with inflation starting to pick up? And certainly, you do not want to fall behind the ball with inflation. Very, very hard to catch up, and that's certainly a concern that the Fed has. So all this to say, that should keep the dollar pretty well supported, okay? And any pullback while above 101 on a larger scale, you still want to stay constructive, looking Fed stretch into 102. A quick look at what the Fed Fund futures are saying now on the back of that Fed testimony. You did see June expectations pop a little bit higher. Now it's 74%, but that's not the big headline here. The big headline is the April is at 53% now. Or excuse me, the May is at 53% now. Now, a couple things to keep in mind, guys. This is not a quarterly meeting. The Fed has never really raised rates on an off meeting besides the quarterly meetings. Remember, this is where we get the press conference, we get to question the Fed chair, and they get a little more room to outline their policy with a little bit more transparency. So this meeting, being a live meeting as far as rates are concerned, is very improbable. Okay, no one's really counting this in. That's to say, it's the year of unprecedented things. So certainly they can. She always says that every meeting is live. So with that said, just keep in mind that's popped up to 53%. Historically speaking, we haven't seen the Fed move on rates without Fed Fund futures showing a probability of 60% or more. So if this does surpass the 60% level, that's when the market would really start to solidify expectations that they may in fact move on this off month on May. Okay, we'll continue to track this as this moves, but on the back of those hawkish commentaries, you did see an uptick in those expectations. Questions on the dollar index, the Fed, Yellen, or any of the commentary that we got yesterday? Levels unchanged from last night. All right, number 2 on the list, dollar CAD. Here's what dollar CAD looks like heading into the U.S. Open. Another one I've been stalking for some time. I do like the upside, as we've been noting. We made a real nice reversal off that key support barrier that was 130.30. If you guys note, you can always click on the link to the previous report, guys, just to check out the charts of where we were. And this was the bullish and validation level at 130.30. So we probed just below. The actual low was 130.25. And then we rocketed right off. Real nice, strong reaction. Now, you don't want to get too excited on the long side till we clear these median lines. Really, really basic channel resistance, a parallel off that swing high from Friday. It gives us really nice resistance. We're probing that right now. Okay, the breakout level for a more substantiated advance near to 132 is 131.40, i.e. this basic trendline resistance off the highs. So that's sort of where I'd be looking for a much more substantiated advance near 132, 132.30 being a big region of resistance. That's right here. It's the monthly opening range highs, the median line on the daily chart here off the highs. What is that from October? And certainly a major target. Ahead of that, guess what? At that 131.40 level is 200-day moving average. So the levels map out real nice. And remember, again, where we're coming off of on the daily chart, pretty big structural basic trend line support. Okay, on building divergence. So was that the pop? Was that the extent of it? I think you look for a new high personally. But we'll need to get through this near-term resistance barrier. Here's what the intraday chart looks like for the loonie. Let me just snap these levels for you. This is the 60-minute chart. Again, there are those parallels. Nice little breakout here. Look for that move into 131.40, just higher 131.47, that basic trendline resistance. And again, on the daily chart, the 200-day moving average. And that's your real key region. If we break through that, love it. Look for a rally right into 132. 132.30 would give you the median line and a 618 retracement from the highs that we made there on the 20th of January. A little bit farther out of view, here's a 4-hour. Actually, the 2-hour probably gets you a little bit better. Okay. Also, now that we've cleared this high, a basic run, and this is a good drill to do just on near-term price action, a basic extension off that high-low or low-high-low. Look at the 100% extension, 131.37. Beautiful, beautiful. Okay, so real clear-cut breakout target. So even though this is a break here, if we clear 131.20 of the objective weekly opening range, you want to be weary of this key region. And again, that's going to be sort of the validation in my mind for a little bit more of a key reversal here in $CAD. Questions on the loonie? Let's clean up these levels just a tad, shall we? Watch that zone now. This is a beautiful target. And one thing I just want to note is if we are basing here, an extension off the low may also highlight some key target. Well, the 618 comes in right here again. No, there it is up here. 31.75. Okay, I won't stress this just yet. I'll leave that 618 there as a soft target. There you go. Feel free to take a snapshot of that. Just a little bit of a tweak for some of those levels from yesterday. But I still like it. I still like it. What I would love to see is a little more structure. So once we get, a little bit more validation, a break of the weekly opening range high would certainly validate a near-term low. Once we get that in play, I kind of want to see this thing give us something as far as structure. I was looking at this last night, and it did catch the highs. Look where that median line, the 50 line, comes in. One more time, highlighting 31.40. So I can't really rely on this structure just yet, but if we do make a break of the weekly opening range high, certainly I'll bring this back into focus for $CAD. Questions? All right, that is loonie. Still on my favored list here. Continuing to favor the long side there. Dollar yen, number 3. It looks like this. Okay. I was personally looking for a little bit of a stall here, and I think Jamie was looking for the same thing, and it looked a little tired. I kind of noted that yesterday with momentum. It was divergence, wasn't the craziest signal, but it was looking a little tired here. So you didn't really get much of an opportunity to get long unless you took that break. It was actually a pretty decent stop, but you're coming in some interesting areas of resistance near term, and that's basically 115.10 into, let's call it 115.20, this confluence region here. Basic trendline support, parallel off the high here, highlights the 50% retracement and the 50 line of this broader structure we've been following off the lows. So dollar yen, here's the daily looks like. There's that 50 line again. Pretty nice. I do like the upside. Do I want to get long from here? No. If you're holding long exposure, stops at break even. If you're if your entry is under 114, I'd have it at 114.27 near term. But your target would be somewhere in the range of the 115 handle, basically where we are right now. The abomination looks a little clean. I don't want to get myself too excited about it just yet, but I do want to maintain a constructive approach at this point. We'll choke up that bullish invalidation level. Last night we had at 113.54. I'd be pretty comfortable choking that up. To that, to that pivot right there. Basically just below 114. $115.54, by the way, is the weekly open. So I'm gonna leave that there, but and you know what? Let's tweak that 38.2 to the weekly opening range high, which we've already tested as support here. So 114.16 to 113.95. That's sort of your key invalidation for the near-term approach here. As long as it stays above this, you want to be buying dips in dollar yen, looking for 115.10. And again, this is the bigger zone of resistance. This 618 that you see here on the daily chart, this is actually a 618 retracement of the entire decline from the highs that we made here in 2015. So I don't want to necessarily stress that key zone. On the intraday charts, we choked that a little bit higher into 115.80, into 115.93. 100 off the low, 618 off the high. Channel resistance. Questions on dollar yen? Okay, Aussie yen, number 4. So the Aussie yen breakout has indeed materialized. Here's what Aussie yen looked like yesterday. I just wanted to highlight this break. We were talking about this last week as it was dribbling below the lower parallel here. I liked it lower. It reversed right through, took out our bearish invalidation level, and key resistance, which we turned from exactly back in December. We closed right there. And in fact, an overnight Asia trade started even pushing higher. So kind of abandoned the entire short side idea, looking for initial targets right at the median line, nothing too crazy. And then the July 2015 low takes you all the way up into 89.16. So you look for a close today above this region to really validate it. But even on the intraday basis, it was looking pretty decent. Here's a 240-minute chart. As you were kind of breaking through that in Asia trade, here's what Aussie yen looks like right now. Okay, really just continuing to push through this pullback. Look for initial support right back at resistance. You have the 2016 open, which was 87.55, the 100% extension, which was 87.54, and the 50% longer term retracement. That's from the highs that we made in 2014. That's 87.64. So big region, and literally previous month or the previous year, last December, caught the highs exactly. So yeah, I think maybe you get in a little bit of an exhaustion trade here, just like in dollar yen, you could get the exhaustion pullback, but I think we have to stay constructive here, Pooj. I don't think you want to fight this any longer. I say that now and it probably will turn over, but the only thing that would put me back on the bearish side on this is if we turn back and close back below 87.55. If you get that kind of reversal in price action today, that would be sort of a classic, exhaustion push through resistance. So no positions personally on this just yet, but I wanted to highlight that break because if it's legit, as long as it's above northbound of 87.55, you want to be looking for the daily chart to really stretch into those top side targets. Questions on Aussie yen? Pooja says, my thinking to only below 87.54. Yeah, I'm not going to try to fight that unless we're back below that region. Yep. All right. That is Aussie yen. Let's jump in some of the euro crosses. Euro dollar, euro yen, and pound dollar. I do want to touch base on euro pound, which we highlighted last week as well. And then we'll jump into some of the commodities. So we are decent on time. The RSI is not confirming the high. You're 100% right, Mohammed. Good question. You're talking about the daily chart here on Aussie yen? You're right. Price action is making a new high. The oscillator is not confirming that high. But, and that's a capital but and a capital T, Mohammed. One thing you want to keep in mind is that RSI, the issue is that the timing problem. We could mark divergence for another month before this thing turns over. So I'm with you. I'm 100% with you. You haven't seen that extreme in RSI, but that's not a reason to fight it. Now, if price action near term starts to give us more divergence, we're coming into an area of resistance, we're back below 87.55, that's a different story. But just because daily RSI is not confirming a high in price, that is not a reason in and of itself to fight the rally. Mohammed, does that make sense? That's kind of my thinking about it, but you're absolutely right. It's good to recognize that that divergence is indeed happening. Trying to use that into an effective trade, well, that's still going to be determined by what price action is doing. Okay. Any other questions on Aussie yen? You're even seeing that divergence on the price action in near term. I'm not sure what you mean by XD. He says I'm long on it, but I'm afraid a little bit. Well, I mean, all you can do at this point is if you have a good entry, Mohammed, put your stops at break even. Or if you're really concerned about it, you're probably trading with too much leverage. Guys, if you're ever put in a position and you find that there's just too much anxiety or you can't look away from the screen, there's something wrong. Either we have too much leverage on the trade or the justification behind getting into the trade to begin with, you're not really convinced. So we want to make sure that we're trading in a comfortable trading size and that you have some conviction on it. Look, it's a breakout of major resistance and a fresh high. So Mohammed, the trend is on your side. If you are, like I said, if you want to adjust your trade size a little bit, that's cool. At this point, I'd have a stop below 87.55 if your entry is southbound of that. But that's the only thing that would really shift my attention back. Okay. Ideally, like an ideal scenario, this pulls back into support, then launches right back into the U.S. trade session. Keep in mind that this is now also the objective weekly opening range highs. So it's like a very textbook weekly price action that we're looking at. Okay, euro dollar looks like this. So my friend the euro has just been a slow drifter. We just hit the final or a near-term key target at 105.26. I think you could possibly drift back into 105 a little bit lower. You have the lower median line parallel there and the 50 line there, but a trade that's been pretty textbook. Here's what we were looking at with euro earlier in the week. Right here. Okay, there's that 105.26 target. You want to stay bearish below 107.20, and the break obviously fueled that next leg down. Here we are testing that region now. Just lower at this point to adjust for time at 105 is that confluence as well. I'll show you the intraday chart in a moment. At this point, you want to go ahead and drop your bearish invalidation level down to 106. The median line, this is long-term slope support off the 2015 lows. And we'll continue to focus on the downside while below this region. So look for a dribble lower. I wouldn't want to chase this on the short side any further from here, but certainly the longer term trend still remains bearish. Here's what the intraday chart looks like. Okay, really clean. It's the same formation that we were looking at back on the 13th. 105.26, that's what we just hit right now. And 105, that's what this is, just lower. Let me snap these levels for you. There we go. just here, is going to be the 50 line off that high. I don't know if you can see that line, and the lower parallel. So weary of chasing euro any lower, but I do think you look for, near term, some exhaustion into this region before this thing at least gives a near-term rebound in price. But levels have played out super well, guys, super well. Former support, instant resistance, target down, there it is. Could get back into 105.85, but you're basically looking for this thing possibly see some exhaustion into this region. Would I take a long in that opportunity? I would at maybe a quarter leverage. If you get some decent divergence into this region and a nice trigger and momentum, yeah, I'd risk it just to play the rebound. Wouldn't get anything too aggressive. First target would be just the median line, depending on where we are in time. Then that key level, that key pivot at 105.84, 105.80, that would be the secondary target. All right. Questions on euro dollar? Okay. Next up is pound dollar. Or let's come back to the pound dollar. Here's euro yen, just while we're on the euro. Actually, we might as well go in order from this update here. Euro pound, beautiful trade. It is coming into an interesting area of support. I was discussing this trade with David Song from Daily Effects. I don't know if you guys know David. He loves the grandpa trade, as I like to call it. A couple of things I was pointing out. Look, there's a couple of things that could be at play here. What we highlighted earlier in the week was this key support zone at 84.08 into 84.43. We turned just ahead of that. You had the 200-day moving average, 786 retracement, 1618 extension. You had trend line support or the lower parallel. There was a lot lined up there. So there's the near-term rebound. The broader trade does beg for a downside break. There's a couple things you could be looking at here. A lot of people are highlighting the head and shoulders formations that could be in play here. That's absolutely correct. It could be in play. The fact that so many people are calling it is what's having me a little concerned. But certainly that wouldn't even come to play, guys, until a break of the neckline, which doesn't come till down here. So anyone who's talking about this being head and shoulders, I think it's way too early to begin with. Now, on a near-term view, you could make the argument that this is a head and shoulders. One neckline, two neckline, and that's the break. Okay, it's not the cleanest, but you could make that argument. If that's the case, it still highlights need for resistance to hold somewhere around here and a push below 84 to get the leg going. So of either case scenario, we've been favoring the downside break of this ever since last week. We made an objective break of the monthly opening range. We're at key support. I was just looking for the rebound. Intraday charts look like this. It's been pretty textbook, guys, and ping pong since earlier in the week. There's that support. Topside break went right back into the 618. That held as resistance. And now we're just sitting mid-range for the week. So you look for a break of this really, really clean, objective weekly opening range, 85.30 to 84.40. Broader bearish invalidation is at the monthly open, 85.80. So as long as we stay below this, I'd more so favor selling rallies in euro pound. Now we'll go over the pound in just a moment, and we've been hammered, like I said, with pretty bad pound data, which hasn't been helping this, even though the euro's been falling off a cliff. But I think, again, you look to inevitably find a little bit more stern support despite the data in the pound. All right, any questions on euro pound before I move on to pound dollar? Okay, number 7, pound dollar. Here's the sterling looks like. Can we look at pound Oz? Yeah, I guess we can. Pound Oz. Oof. She's a toughin', huh? She's just dropping like no one's business, but we'll take a look. Pound dollar. Okay, so we're coming into some near-term support. This was the last support target that we highlighted earlier in the week. So here's what pound looked like earlier in the week. We cited a downside bias while below 25.68. You saw a fake or a near-term topside break, quickly collapsed, and then took out those downside targets. We're now looking for a move into this region, 23.46, 23.59. That's this zone right here. And we're looking for a new low to buy. Beyond this point, I don't want to get too aggressive. The next confluence support region I have isn't down till 22.60. I don't know if you want to necessarily get quite aggressive on a move that low, but the premise of the bias here is that you're looking for the correction off the high to be in three waves. Okay, we had an outside daily reversal off resistance. That shifted the focus lower. You slammed into a low, real nice rebound. The monthly open held as resistance. I'm basically looking for a new low. I don't know if we get quite down to 22.60, but near-term targets, your first approach is right now. This 50 line, which has been very nice support here, you're touching here, you're touching right now, and 23.40. Okay, beyond that, just be wary of the short side. Here's what sterling looks like on the daily chart, and just to let you know how bad. I don't want to just blow it out of proportion, but the data has been here. Here's the British pound docket. So you saw CPI year on year slip to 1.8. The Bank of England has the same problem that sterling or the U.S. has, or not the same problem, the same focus on stoking inflation. So certainly it was an uptick, but weaker than expected at 1.8. Core, okay, held at 1.6, again, missing an expected uptick to 1.7. So today's data, whoa, jobless claims contract by 42.4 thousand. That's awesome, right? Everyone's cheering. Wait a minute. Weekly earnings, or average weekly earnings, excuse me, fall from 2.8 to 2.6. That's another gauge of weaker inflation, right? So it's not that rosy of a picture, and stoking inflation, specifically speaking, hasn't really been able to effectively filter into wage gains, and that's sort of been one of the issues that the BOE has been facing. That said, price action is price action. Okay, we were looking for a new low. The data only helped fuel it. We're moving lower here. Expect a rebound off this trend line. Again, we have a really nice touch, resistance, support, 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 support. Okay, these former lows. Where would you expect resistance? This is an hourly chart. Yeah, I keep the levels the way they are. Bearish invalidation still has to be the weekly open. Initial resistance would be the upper parallel, so that's going to be determinant on time, but somewhere in the range of 24.60, just below those Asia highs is where I'd want to stay bearish below. And a break here, initial targets, definitely be looking to take something off the table at 23.40, 23.60. Okay, big region. And subsequent target, like I said earlier, 22.26 is sort of the stretch. I'd be on the hunt for long exposure off this region. But certainly I think the risk is still lower. Okay, questions on pound dollar. If we clear the weekly open, it might be the rebound off of this uptrend support, in which case you would look for continuation. But for me, I still think I'm on the same pact where Jamie is. I think I'll look for a break, something below this correctionary low that we made yesterday. to complete that before moving higher. Mohammed says, what I noticed on the pound is that although we saw hawkish yelling and good numbers from the U.S., it didn't fall as Euro and the Swiss. Any explanation for it? Yeah, absolutely. Mohammed, that's a pure tell on trend. That's definitely something I look for. Guys, if an economic announcement or a market shock pushes a specific currency in a specific direction, the least impacted of those tells you that that trend is not the broader trend that the market's moving in. So instead of charging a full-on collapse, it's just charging a pullback within the uptrend. Yeah, absolutely, Mohammed. That's another great observation. Okay, Euro yen. Just want to touch base on Euro yen. Here's what that looks like. So this thing, pretty much has just set, a clear and well-defined weekly opening range. Here's what Euro yen looked like earlier in the week. And we were highlighting the favored downside move, okay, while within this weekly opening range. We really needed to clear that near-term support at 120.33. We haven't, okay? It came right into this region. We sat there, tried to break yesterday after the webinar, failed, came right back into the weekly opening range high, i.e. resistance, 121.12, failed, and now you have a very clean weekly opening range. It's Wednesday. So if you see a topside break on a recovery, you'd look for that move back towards the median line. More importantly, 121.60 would be a soft target. Former resistance, this region here. Another opportunity, I think, of where you'd start to look for more rigid resistance. But this is pretty big. This is pretty big here. I wouldn't want to get long unless we clear this. I wouldn't want to get short unless we have a decent trigger, and a stop against that high would actually be the way I'd want to play that short side in Euro Yen. Actually, let me see what the near-term chart looks like. Euro Yen looks very interesting here. Here's your London high, 121.15. It's only 10 pips off. Some divergence. Might be a decent trade. 5-minute isn't really showing you much encouragement. In fact, this is pretty constructive with the break back from sub 40, now finding support at 40 in momentum, and then the 60 break. But the divergence here suggests you could see a near-term pullback. So Euro Yen, long story short, 121.12. Just above that, you have the parallel 121.30. I know it's a big range, but it's Euro Yen, so the ATR is there. That's sort of the breakout for a more constructive play. If anything, I am treating this as a correction. Broader trade remains bearish for Euro Yen. And watch dollar yen on that front as well, for that matter. If we do get the exhaustion ahead of 115, that might be the pullback in Euro Yen. Questions on Euro Yen? Okay, quick run through the commodities. Actually, let me hit pound Oz for you first. Who is that for? Pound Oz. Mohammed, that was for you. Here's what pound Aussie looks like. I don't really follow it on a daily basis because, the intraday chart hasn't been all that clean to me. Let me take a step back. The reason I don't like this trade, let me tell you that, Mohammed, is because of the Aussie, not so much the pound. I've been one of those guys who really doesn't like this Aussie rally. So even though it's moving higher, I'm just not involved in it. I like the broader upside in pound. That kind of leaves me neutral here. And this thing has been all over the place since the start of the year, right? Pretty straight, crazy V recovery here. Don't really have a good handle on it, but let's see if we can put some color to this puppy. Hold on one sec. Okay, no good there. Okay, could see a little consolidation formation that you're kind of wedging into right here. Hmm. Okay, so you have some decent levels. So this is what I would say on pound Oz. Again, I would like the long side. Okay, from a fundamental standpoint, from a technical standpoint, just of taking price action considerations of sterling dollar and Aussie dollar. Although I've been wrong on Aussie, I'll say that straight up. But I would still, if you put a gun to my head, I'd rather be short. So Aussie dollar, that is. So with that said, you're marking some divergence here, Mohammed, into the lows. Price action making a lower low, the oscillator making a higher low. You don't necessarily have a decent trigger to work with. You might. There you go. Not bad for a topside break, but I'd be looking for sort of an exhaustion low. And in time, that'd be sort of nice if it happened right around here. I bet you that's the exact 88.6 too. Boom. Nice. 160.90. That would be a nice exhaustion point. That's basically into tomorrow's trade session. If you get like a drop into this tomorrow in New York, you'd need to see a break back above the upper parallel here, the formation, just to get the go-ahead. Such a scenario, you take a basic retracement off those highs and you play the levels to the upside. It's pretty simple. And get rid of that. You don't need that at this point. This is a nice pivot. Does that make sense, Mohammed? Does that help? Again, not a trade I really follow on a normal basis, but when the structure is there, I'm all over it. We have had many times where we followed sterling Oz, but at this point, I think you want to be cautious. Objectively, it looks like you made the weekly open, you press into and high, you made a weekly opening range low, failure at the high, you broke back below the weekly open here. So yeah, I would think that the initial risk right now is for this thing to drive a little bit lower, look for 161, 160.90 to offer a little bit of a support structure on the downside. He says, that's clean. Cheers, mate. Hope that helps, man. It's typically a nice pair. It's just over the last few months with everything that's been happening with Aussie. Again, I tell you this, as everyone in the room knows, Aussie has been, over the years in my career in FX, has been the pair I've traded most often. But this certainly, the stretch, the magnitude, the time of which we've spent below resistance not doing jack has certainly thrown me off kilter here with Aussie, which was our best performer last year. I mean, this thing was the cleanest of all the dollar majors. So these things happen. They come in cycles where price action will be super, super clean. You'll get the break, quick recovery, then a little bit of whatever the hell that is. So 76.09 as support near term in Aussie dollar. Key resistance I still have up in 77.56, just a little bit higher. By the way, here's some upcoming U.S. data if you're hearing that, terminal talking. Industrial production comes in at negative 0.3%. That's a miss. Capacity utilization, also a miss. Slight upward revision to the previous month, so that's going to be a wash. And manufacturing production right in line with expectations. Dollar price action. Okay, starting to pare back some of those gains from earlier. This is still the threshold. We push back below this, don't fight it. Remember, we've been rallying pretty darn hard. I'm favoring the upside, says Mohammed, as I think the pound will outperform all currencies in the short to medium term. Mohammed, I would agree that I would prefer the upside of that pair as well from a better level. I don't know if you want to say it's going to outperform all the currencies, because remember one thing, guys. Of all the central banks, it's really the Fed that's on the highest pace to, how do I say this in proper terms, normalize more. We're the ones that have the inflation that's starting to run up at target, which is 2%. We're the ones who have employment pretty much at the quote-unquote natural level of unemployment. That's the Fed's dual mandate. You have what the market perceives to be fiscal policy coming down the pipelines, which will be very helpful to economic growth in general, will stoke economic growth. So yeah, I don't know if it's going to be the best performing currency, but I do think that the pound is way overdone to the downside. I'm with you on that. And I just don't buy that the story of, the Brexit is just going to prompt a collapse in the pound to this degree. That's the abomination rubbing off on Aussie via Aussie yen, right? It is. I completely agree. My dearest Aussie, all messed up now because of what yen is doing. If anything, guys, just treat it as a range. Don't get too excited on the long side and target anything north of 77. Don't get too excited and on the south side and target anything south of 76. It's just this 100 pip range. Live or die by it until we clear. Okay. That is pound Aussie was number 9. Let's just jump into some of the commodities here. I'm going to preface this by saying what I said to Conwell early in the conversation. I don't really like the commodities at this juncture. Kind of lackluster in price. I do want to just highlight, same key range. Here's crude prices. If you're not sick of this chart and you're not sick of the weekly chart, I'm working to make you sick of it just so that these levels are drilled down into your head. Again, here's crude, key resistance. No surprise, anything moving to the downside sub the 54, 75, 55 handle. No surprise on anything lower beyond that. Intraday or daily, I don't have anything intraday really compelling, but in daily crude, pretty clean. As far as where resistance and where support is, you're sitting on near-term support at the monthly open, downside break, same level, 5140 to 5160 near-term support, key resistance 55, 5475. Copper looks like this. Number 11. The only thing I wanted to highlight, we talked about 272 being the resistance region and the monthly open. Watch if we break through that. Guess what? Remember that level that we dropped yesterday? Looks like it was worth looking at because as it stands, the close was pretty far off that region. Then we had a big old reversal day yesterday. So note that these highs came on divergence and suggest again that you're seeing waning momentum. So from copper standpoint, I still think you're at risk for a near-term pullback here as well. The broader trade remains constructive for copper. Remember these levels, Conwell, here are the ones that we looked at yesterday. There was near-term slope support, just using the basic trend line here, support. Take a parallel here, offered really nice touches. Take a parallel off this swing high, really nice touches. Again, sort of mimicking or highlighting the risk for near-term exhaustion. A break of the weekly open, the weekly opening range low, shifted the focus lower yesterday, and certainly I do think that you risk a little bit more of a draw lower. If you take a parallel off that high, it even still highlights, that 271 low that we made for the week already. So I'd be looking here. I'd be looking here for possible areas of support. And as far as the bearish invalidation level, Yeah, it would have to be 277, 276. The opening range low for the week is the only level, like, logically that I would be comfortable with calling is bearish invalidation. Keep in mind, we're in an upslope. Okay, you're coming off upslope resistance, so any pullback on this Commonwealth should be treated as corrective. And again, largely speaking, the broader trade remains constructive. I just think you're coming in some pretty big daily resistance, and even from a near-term standpoint, you could see this thing snap a little bit lower, give us a better correction to the downside to get a little bit more an aggressive stance on the long. All right, 272, 271, still support. Silver, number 12, looks like this. You're basically looking for evidence that this is a failed pull above key resistance. We highlighted this level last week. Very, very clean weekly opening range on this, okay? Look for the downside break. I would favor, personally, a near-term downside break, inevitably to get long. But if you look at the daily chart, and as I was chatting with you earlier, you haven't really, you got one daily close above the 200-day moving average before snapping down pretty low. Yesterday failed to close. Today, again, you have all this pent-up resistance. If this was gonna break, I would have expected, like I always tell you guys, to see this break fuel a leg straight up into 1840, 1838. Big region of resistance. But I don't know what to do with this. And the weekly opening range is set just below that May high, and I'll look to play that region as it comes. If you get the break above the main high, look for that play into 1835, 1837. But more than likely, in my humble opinion, I think you get a little bit more of a setback lower, back into the monthly open maybe, before you start to move into that high. I just don't like how this hasn't really given us, the stern break. Now, I know Jamie has us, if you take a much longer-term approach to this, Jamie has us at longer-term structural resistance as well. So the risk for a setback, but overall, trade still remains constructive, basically above that 100-day moving average, these swing highs, 1730. And nat gas for Mr. Conwall here. Oh, type in your name instead of nat gas. As I told you as we were chatting earlier, just be weary of this, okay? You're getting some, we were talking about the divergence you're getting to these lows. I didn't have anything structurally on the near term that caught that low, but on the daily chart, it was basically that 200-day moving average. We missed it by a couple of pips. So yeah, you could see some more upswing here. You are a little bit more prone to a downswing move, I think, while below 309, this region here, former highs. But broadly speaking, you still want to stay bearish below the monthly open on this. Made a very clear break of the monthly opening range earlier this week, so that's sort of my my near-term take on nat gas. Again, commodities, it's just not my play right now, Conwall. They're not as clean as you would want them to be. I think you're still better off getting play or action in some of the dollar crosses. If anything, crude is a very distinct and direct range. Gold prices, by the way, have been also continuing to follow our game plan perfectly. And what I'm looking at right now is a possible break below 1217 to really get this thing going. Let me reset this for you. Here's what the daily chart looks like. And we were talking about the fact that this thing turned right at slope resistance. Okay, current slope support, broken, also resistance. Take a parallel off that, extend it off the lows from late this January, and we were sitting there too. So big bounce at 1217 into 1220. That was last week. We were talking about that region being sort of a key zone. Into Friday, we bounced right ahead of it, came right back off, and here's the rebound yesterday that we got off that region. Oops. Okay, this looks like it's breaking a near-term slope to the downside. The only thing I'm looking at is this. If I zoom this out, some parallels highlight. This is the 123. So if you take derivations of the fib sequence off slope, a lot of times they'll help you identify some areas of pivot in price. One of those is obviously the 50 line, which is not a fib, but sometimes we'll take the 618. You'll see oftentimes that'll help. The extensions, which extend to the outer bounds away or out of the realm of the pitchfork, also can be helpful. You can see a nice pivot here on that 1236, and that also comes in just lower. I don't want to stress it, but long story short, for gold, you're looking for a possible move into the monthly open with a break below this region and 1204. These are levels I would be interested for sure in getting long exposure. Depends when it happens. Okay, monthly open comes in right at 1210. 1618 extension from that decline comes in at 1205. If you look at the gold to silver ratio, that says to me that silver is going to outperform gold. I think I'm pretty comfortable with that comment in general. Keep in mind, we're not bullish on gold from a fundamental standpoint. We're bullish on gold from a technical standpoint, guys. The fundies for gold are not really there. Remember, historically speaking, what are the two major prospects for gold bull runs? A, running inflation or concerns about inflationary runs, and B, market shocks, recessionary times, spillovers in larger equity and risk assets. You're not seeing either of that right now. Yes, inflation is creeping higher, but we're stoking it. We're trying to get that higher. The one thing gold has moving against it from a fundamental standpoint is Fed expectations for higher yields. If the Fed's going to move higher on interest rates, that only hampers gold, which does not pay a dividend, right? It doesn't pay yields. So, yeah, I don't think the fundamental story for gold going through the moon is there, but certainly from a technical standpoint of where we started the year and where this thing has been trading, that's what shifted our attention to the upside. So yeah, on a longer term, Mohammed, I'm not sure what time frame you're looking at. I would say that I think silver would be poised for a little bit more gains. Absolutely. Okay, any questions on gold, silver, any of the commodities? You talk about the daily and weekly time frames. Yeah, I would agree with you on that. Okay, that wraps up everything on my lists. Just to make sure, euro, pound, sterling, euro, yen. We got everything. All right, wrap it up here, guys. Don't forget, quick reminder, Jamie will be on board at 12 o'clock with the midweek strategy webinar to go over some of the larger prospects, daily and weekly charts. Mohammed, this is right down your aisle, and he'll be on at 12 Eastern, again with the midweek strategy webinar. I'll be back tomorrow morning, 8:30 to wrap up the week. Till then, best of luck trading, guys, and I will see you there. Cheers.